All right. Test. Okay, cool. I believe we are live. Here. Yeah. Okay, cool. Welcome, everybody. Today is July 1st, the first day of quarter three. My name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading, and we do weekly streams with Bookmap. So we'll get into it a little bit more, but a little bit more about myself. You can follow me on Twitter at _RIEGLE, so just my last name, or you can follow, we do some market outlooks. We also do some education on our Twitter at DARMA Cap Trading, or you can reach out to me personally at LinkedIn, just my full name, so Spencer Riegle. I am fairly active on all three. Or you can reach out to me here in the Discord in Bookmap. So without further ado, let's get into some disclosures. So all information and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So each week we usually start off and we like to talk about risk capital, right? So our single most valuable asset as a trader is having a seat at the table. And part of that is having risk capital, right? And so what is risk capital and what do we see risk capital to be? Risk capital is capital in which you are willing to put at risk for a greater reward, right? So if that capital you need for bills at the end of the month, or you need to go out on the weekend, or maybe just have a better quality of life, that's not risk capital. That capital should be used for that better quality of life or those bills at the end of the month. Risk capital is capital in which you will not have any material impact on your life or the decisions in your life. There's a couple reasons behind that. One is psychology, right? So if you are in a trade and you are thinking about your bills at the end of the month, or you're thinking about if you can go hang out with your friends and do XYZ on the weekend, and you're thinking about that as you enter the trade and as you exit the trade, you are not thinking clearly, right? And so sometimes you are going to press the market when it's not ready, and you are going to potentially not take as much risk as the opportunity exists as well, right? So it's kind of two sides of the coin, but the best way to do that is just allocating risk capital. So setting some capital aside that you're willing to risk. The next little bit of house cleaning is every week we talk about our new website. So we'll actually dive into it a little bit more because we have launched our full integrations on the website. So we have those on the website. We also have the playbook, strategy, some options. We have some rankings, some scores. So all cool gadgets and tools that are now live on the website. So we'll get into that as we get into the outlook. But for those that are new, usually we take a top-down approach to markets, right? So we hop on every 7 days, roughly. It's been 8 days since the last one. And we talk broad, macro, right? So kind of what's going on in the world. And then we dial it into more of a weekly outlook. And then we get very granular, right? And we look at Bookmap. And then we see where that resting liquidity is that's sitting in the book, right? So the bids and the offers. And then we really develop a strategy and a thesis around all of those pieces together, right? So last week we talked about the Middle East, right? And we talked about the war. Obviously, Israel going into Iran, right? And drastically escalating the issues in the Middle East. And that's some of the first conflicts that we've seen at that scale in quite a long time. And then also the escalation of the United States, right? Entering in and targeting those Iranian nuclear sites, right? And so it's been about a week since that happened. Obviously, last Sunday, in 2 Sundays ago, oil bid up off of the open, right? Opened up about 5%, and immediately the market sold off, right? And we kind of talked about that, and oil obviously being a major commodity when talking about Iran. And then some of the economic warfare that they could press back on the United States and create further inflationary problems here locally, right? And so what we were monitoring and kind of what we touched on last week was commodity price of oil. And so quickly through that session, Sunday open, we opened up 5. And then as we hopped on last week, we were down 8.5 on the front month futures. And then since then, we've also basically reversed the whole increase in price, right? That whole bid up in the conflict in the Middle East. And the market quickly priced out and faded an escalation in that war, right? There was a couple things that we were also talking about. One was the U.S. Entering the war was a significant escalation, and typically those don't tend to be quick resolutions. However, it was incredibly quick, right? And so the U.S. demanded kind of a ceasefire, right? And so what we were monitoring was if that ceasefire was actually going to hold up. It seemed to be kind of on the fence last week when we hopped on. And after basically the first 24 to 48 hours, it has held up, right? And so that escalation has decreased significantly, right? And markets have rebounded, right? And they've rebounded, basically repriced all the way back to where they were pre-event, which, if you believe in fair price, that logically makes a lot of sense, right? And so that's where we were after that. The next kind of larger thing that's kind of been going on is this new bill that's been passed, and it just went through the Senate, and now it has to go through the House. And Trump obviously has been implying significant pressure to get this done, and he's imposed a July 4th deadline, self-imposed. We'll see if it actually gets done prior to that. However, that is something that markets are watching, right? And that is something that is capturing headlines. And then finally, there are two feuds in which we should talk about. One is a further escalation again in the Trump and Elon feud. Last time it had basically an afternoon of impacts to markets. This time it really hasn't had a large impact outside of the impacting Tesla's stock independently, and broader kind of broader markets really haven't had an impact over the last few sessions. The next is talking about Jerome Powell, and so the Trump administration has been increasingly more have applied more pressure on Jerome Powell, and in terms of lowering rates and talking about that he needs to lower rates, and Jerome Powell is holding his ground, and so basically he came out today after Trump went after him last week. He came out today and said that if without Trump's tariffs, we would probably have already lowered rates, and basically that's what's creating the lag in the lowering of rates, right? And so there's a couple things to think about. We have unemployment this week on July 3rd. And so if Powell is stating that, hey, the economy is good, and we continue to not see that data impact in terms of higher inflationary impacts from the tariffs, then that kind of puts him on the hot seat, right? Especially if you could get an uptick in unemployment and becomes a weakening outlook, right? And then the next is a forward-looking to kind of the Fed funds futures, right? And so currently in July, the July futures are not pricing in a rate decrease. However, if you look forward into September, September is a majority is in favor currently that we are going to see a rate cut of 25 bips. And then as you kind of progress, right, you'll see further rate cuts being priced into the market this year, right? So those are kind of larger things to think about and look at that we're kind of watching as we go through markets through kind of what has been a lower volatility environment since over the summer, right? And those are some other things that we'd like to talk about. So if I have up here, this is Greeks Live for those that are unfamiliar. But specifically what I wanted to touch on today was if you guys are interested in volatility and in vol markets, Bitcoin particularly is under a 40 vol on the 30-day. So the implied vol is around a 37.88 on the D vol, which is the Deribit implied 30-day futures. And skew has sold, right? And so we got a bump up recently. However, front month skew, the 25 delta call put skew, was in negative territory, puts over calls briefly over the last month with declines, and then later out in the term, right, 3 months, 6 months, a year, it's kind of flattened out to closer towards zero, right? And then as we kind of toggle over here to Ethereum, you will see the same thing. So the implied, and let me zoom in a little bit so that we can get a little bit more granular here. The implied market has seen selling, right? So we were at a 70 handle prior on the 30 days, and over the last week specifically, we have really seen some selling, especially in that front month future, or in that front month tenor. And then on the 25 delta skew, right, same thing. We've seen flattening out. And let me get rid of the 1 years, but if we look 1 month, we are in negative territory at a negative, roughly around a negative 2.25. And then 3 months, 6 months out, we are roughly flat to slightly positive, just under a point. So that's impacting markets significantly, right? And that's impacting kind of those options significantly. And so we've seen large impacts and kind of how that volatility surface is shifting. So let's dive over to, that's kind of the macro, just talking about kind of the larger political events, what's kind of going on in the world, and then also talking about the derivatives landscapes, volatility markets, etc. So let's dive over. Here's our website. So for those that are new or they're going to catch the recording, we launched this year. We also have integrations with multiple different brokerages as well as front ends, right? So that fits kind of anything that you're familiar with using. And we're actually actively rolling out new integrations as well. But we do have a website version. So for those that just want to stick around on the website, we'll go over here and go over to the price map charts. And let's pull up Bitcoin. We'll go through a Bitcoin outlook first. So this is the Bitcoin US dollar perpetual future. Yes, and let's pull up the weekly. Great. Yeah, and that'll update for us. Okay, perfect. And then we'll zoom out a little bit. And then let me make sure I have Bitcoin on the right side so we can see some of that resting liquidity. Okay, great. Couple other things to talk about is it's the first day of the new quarter, right? So there's a lot of different flows. We are in a US holiday. So I would say that I've seen some years where we just price bid up through the holiday, other years where it's been basically a non-event, right? So as we kind of head into the weekend, the desks typically get a little bit quieter, which is twofold. Liquidity being offered and bid in the market is lesser, right? Which means that actually the potential for, if there's large movement, those books are light, so we can actually see a larger realized environment. And then the other is just a lack of any deals, any trades going on, which is also basically a non-event, right? So that adds to kind of a digestive outlook as we go through the week. So let's talk about the state first, and then we'll dive into structure, then we'll dive into strategy, and we'll go through every piece of the playbook, right? And so on the left, this is our proprietary data and analytics, right? So this is what we talk about every single week when we hop on. And then on the right is what we call the playbook, right? And in the playbook, we have a market state, we have a market structure, we have optimal strategies, so what to look for as you approach markets. We have options, and then we have score, right? Options is its own independent kind of strategy, and then score defines where the best place for allocating capital is, right? That risk capital that we started this session talking about. So first to talk about is the state. Current state is a bull trend correction, right? So a market in a bull trend correction is a signature state and has produced a negative signal against a positive trend. The market remains firm, however, is vulnerable to a counter trend corrective break. The market is searching for support and is characterized by a stop and go trade with sharp emotional breaks. The corrective action can disappear quickly, so avoid leveraging up on any sell-off, as the positive momentum will try to reestablish itself. A tell to a return to the bid is a capitulation reversal signal off support. A sustained break in the underlying positive structure is more likely to result in shift into a neutral market state versus a negative transition. Don't lose sight of the underlying positive momentum, which can start to feed on itself near the end of the trade period into settlement phase, right? So settlement phases for the weekly is going to be the last couple of days of the week, right? So Friday, Saturday, those are going to be holiday days, right? So it's basically a 50-50 there in terms of if we get a bid up or we get some realized environment. More than likely, it's going to be a lack of flow, right? And it's just going to be a digestive, choppy trade through the weekend that decays that option premium further, right? And so one thing to look at is that volatility. If you continue to see volatility to the market being offered, that's a sign that the market is not pricing in a volatile weekend ahead, right? So the next piece here is let's talk about the structure. So we always talk about where's the R level in relation to the directional. Directional is right here. So the R level is in direct alignment with the directional. So this market is signaling two things. It has spent its time, it's ready to go, but just because the market is in balance doesn't mean it needs to get out of balance, right? I was a biomedical major by trade, and what we always talked about in biology was homeostasis, right? And the body always seeks to remain in homeostasis. And so if the body's in homeostasis, there is no incentive to get out of homeostasis, right? However, if all of a sudden the body's in homeostasis and you are in shorts and a t-shirt and you go outside and it's 30 degrees outside, now the body is out of homeostasis. So now the body seeks to find new balance. That's the same thing in markets, right? So just because the R level is in alignment with the directional does not mean it needs a breakout. It does mean that you need to be on high alert for a breakout, right? Because a digestive trade preludes a breakout trade, right? So that's basically all this is saying right here. Strategy here for the week is a sell R fade or a buy DP reversal, right? So if we kind of go back to the market state, right? Looking for capitulations on a down move. We see the down move defined by our critical range. Our critical range we see to be the UP down to the DP, right? So that's 111 and some change all the way down to 102 roughly, right? A trade through 102 that rebases over 102 is very positive and very constructive. That is the capitulation that we're looking for, right? By definition. So if you get a trade right through 102 and it rebases real quick and then we base over 102, 101 becomes the risk, right? And 102 becomes where that trade starts. And that target is right back to that 106 to 118 level and a transition, right? If we can base over 106 to 18 immediately, then the target becomes 111 and 111. What is that? 119518 for that upside target, right? So that would be, on the strategy side, that is the buy DP reversal. The other side of this is talking about a breakdown in structure, right? So let's say you get a break under the DP, right? 102 breaks, 101 bases, we price right back over 102. A trade back to 106 in a quarter, but does not base over, is a sell R fade, right? And so you can fade that level with the expectation that a retest of that 102 level won't hold, and you could really get some capitulation further down, right? And that's kind of alluded here in the sell DP breakout, right? That on the hedge theme specifically, a sell DP breakout, which is a break under 101 that holds down, is a market that does not hold this structure state, right? We're looking for capitulations that quickly reverse. If this does not quickly reverse, this is a market that is in a sell DP breakout, which targets 96.7913 for the first target, and then the second target all the way down at 91, right? And that speaks to the nature of the R level being at the directional, right? So those are some strategies for the week to look at. Another strategy to look at is if we do base here in the next couple of sessions over the next hour, that's positive. Again, remember, we are in a bull trend correction, right? So the market is saying that we are still in a bull trend. Positive price structure in a bull trend is positive. So 106 and a quarter is the figure to watch. Over 106 and a quarter puts the upper limits here, the upside pivot in play of that critical range, right? Which is basically 112 for a potential expansion up to 117, right? So those are the outlooks. Let's take a look over here at Bookmap. In Bookmap, you'll see a ton of resting liquidity just offered and bid up all throughout the book. So we have some offers here at 108.5, which is basically off of Sunday night's highs, or Monday's highs, apologies. And what is that? Yeah, it would have been Sunday's highs. So those are important to look at. And that's why that resting liquidity is up there. You also have alignment up here with the weekly CR plus, right? And so that would be that tighter digestive trade. A trade within the CR minus to the CR plus this week is basically what would be the non-event for the holiday week. And you can see there's alignment here directly with those bids and offers. So 108.5 is stacked all the way to 109.5, and then 104 direct alignment here. So those are key areas to watch kind of for that super tight range of that non-event holiday week, right? So if these brown areas, the CR minus up to the CR plus, can't break out, it's fair to treat it as basically a non-event, right? So volatility likely comes in a bit further, maybe a point or two. We are quite low already, historically speaking, and so don't get caught up in chasing an expansion in range. Let's jump over to Ethereum. So we'll do the same thing here. Cool. All right, so we'll pull up the weekly here, and we'll go through this. So in terms of volatility, and I monitor volatility quite often, we are in, especially on the 1 month, we are in a relatively cheap area from basically this year, right? It can go much lower, especially if we continue to digest in this range and we really don't see a catalyst in the future, nor do we see risk or any reason for volatility to expand, right? So keep that noted. But let's go through exactly just how we did it here. So market state's in a neutral digestion. Neutral digestion is a market state is characterized by sideways trading conditions with limited profit potential. Opportunities exist on both sides of the market, but directional moves are not expected to be sustained. Avoid chasing momentum, be patient, and focus execution at key structure points, employing effective risk management strategies that protect any unrealized gain. Right? This state can be a precursor to a potential breakout as prolonged coiling action builds power. Looking for an early session trend move with no break in the positive or negative structure as a tell to identify a positive breakout. Right? That is kind of off the table currently, because we already got this price move up and then immediately we failed, right? So we're right back at that R level, which is in direct alignment with that directional. And this is the over-under number for the week, right? So 24.05 in 3 quarters is the level to monitor. Under it, the expectation is for a trade down to 22.20 in 3 quarters, right? But because of this neutral digestive state, the expectation is that level likely holds. And then same thing to the upside. So the UP at 26.30 and 65 cents, same thing. We're going to move all the way up to the UP, but a stalling, that would be a normal neutral digestion, right? And so let's talk about those optimal themes, right? Exactly what we just talked about. So a buy DP fade, a market that trades here but cannot break through, that's a buy. Where does it fade to? Right back to 24.05 is the target, and then a what if to transition to 26.30 for that symmetrical move off the DP. And the same thing to the UP, right? Sell UP fade. So 26.30 to the upside. If we fail here and we can't break out above it, that's a fade. Where does it fade? 24.05 in 3 quarters. If we can't hold, right back down, right? So for the strategy section, specifically here, let's run through the optimal and then so that we can kind of give some color here. So technically the market is in a neutral digestive position with all balanced indicators. The market is on the fence with the potential to go either direction or nowhere. Pick your position or pick your points and have no expectations, as the likelihood of this market trading sideways is high. Use a buy DP fade and a sell UP fade to participate in narrowing of the digestive range. These strategies will typically work best when the market starts the session pressing either extreme versus rotating around the directional level, right? So if over the next 24 hours we get a break in price all the way down to 22.21, right? All of this is saying is, instead of chopping around this tight range here, it may be better just to stay hands off. Look for the extremes here to deploy that risk capital. So 26.31 essentially, all the way down to 20 is a fade, and then 22.21 is a fade as well. That's defined by these dash lines up here. If you get a breakout over that dash line, that is the definition of a breakout, and that puts the state in question, right? For that state to remain, you need a breakout failure, right? But a breakout that holds positive price structure targets 28.35.60, and that negates the neutral digestive state, and that puts the market right back into a new market state, right? That we can go over next week. So same thing here in Bookmap. So let's pull up Bookmap. The Ethereum book these are perpetual contracts again. But it's quite light, right? So we have 23.80 a resting bid, and then 24.50 on the offer, a resting offer. And so that's essentially just these metric boundaries, which still defines this R level here, right? So the biggest thing to kind of monitor over the next 24 hours as we head into the holiday week is a 24.05 in 3 quarters. A base over it puts the market potentially back on its feet. A base under it puts the market in question, and volatility further in question. So that is the Ethereum and Bitcoin outlook. I'm going to open it up for questions, and I'll answer them here in the Discord if you guys have any questions. I see. Yeah, so Steven said, is Greek Live free or is it a paid app subscription? It's free. So they're a top level brokerage team. I believe they are I know they're in Southeast Asia. I'm not sure what country, but they provide data analytics on top of Deribit. They also provide clearing services. They have multiple different things here as well that you can take a look at. But I use their front end application within their data lab to take a look at some of the skew. That's one of the skew readings that I look at. But But yeah, they are free. So it's a pretty good free resource. Yeah, Spot Gamer. Yeah, the Spot Gamer team is great. So I really enjoy the Gamer outlays that are kind of in the equities markets. In crypto markets, Delta One market, so the perpetual market, the spot market is the primary driver of flows. So you don't see, I don't know if you've taken a look at some of the GEX levels that come in off of the big orders in the equities, traditional equities market. So the JP Morgan collar is a big one that people monitor. But there's also just regular GEX, 1 day 0 DTE GEX that people kind of monitor and use. That is, from what I've seen, less impactful at this current point, but I've been involved in these options for 5 years now. So they've come leaps and bounds in terms of their flows and liquidity that is being offered. Yeah, yesterday was OPEX, yes. OPEX is a big one. Obviously, it has large impacts in terms of flows, but predominantly, especially in those equities markets, it has a large impact on that delta and that underlying delta in the market. Yeah, so typically you'll see that delta either loosen up and then you get a rebalancing of that delta on a large scale, right? And it potentially can create that large negative gamma ranges where essentially machines they have to bid up those futures, right, to hedge off that gamma. And those are always interesting days. And you typically get a lot of an outsized realized move on those days, right? Whenever you can catch a dealer short a lot of gamma, then you typically can you can press it a bit. And partially the reason is there's not a great way to hedge gamma. So especially those 0 DTE options, they basically go zero to at the money quick. Yeah, for sure. I mean, we actually, here, I'll show you. So for those that are watching the YouTube recording, Steven's saying, I'm slowly understanding vol and all of this. I need to start learning more about option strategy. It's my weak point. I am, this is kind of a little bit of behind the scenes, but I'm actually reworking all of the options piece here. So we are going to be launching that here in the short term as well. So for each market state structure, there'll also be an options commentary here that will basically tell you strategies to look for, some ideas around what volatility will do in this regime, and just in ways to kind of think about it outside of just a Delta One perspective, right? And so when I say Delta One, I just say I'm thinking in terms of two-dimensional, up or down. For those that are entering into the option space, you'll also notice that there is all of the Greeks, right? But there is the full vol surface too, right? So you have skew, you have delta, gamma, vega, rho, right? And then you have the second orders on top of those that impact basically as time goes by, what does that impact to your delta, which is kind of what we were talking about in relation to why OPEX is important. Because all of that matters for portfolios that hold a large amount of options. So I'm a huge fan of options. I think they are a superior product to express a view on any price distribution, and that goes for all markets. So instead of basically buying or selling and thinking the market is up or down, you could say, if we are just looking specifically at this price map here, and historically we know most of the time trade does not exceed a UT1, then we can express a viewpoint there and actually sell that call option, right? And that call option in the market currently, we could actually look. July 11s, the 2800s are going for about $5, right? Which, is incredibly cheap right now, and I wouldn't suggest it just because of how volatility's come in. But as the underlying has moved or moves, that stat still holds up, right? And so just because the underlying is dynamic, the expansion of ranges tend to be important to look at, and the price of the options is where the interesting pieces come into play. So yes, that is we're all going to be loading those up on the website soon too. But we can actually go through some strategies too. If you ever have any questions, drop them in the Discord and we can run through some strategies on the weekly call too. All right, cool. I see Steven's typing, so I'll let you. Okay, cool. Yeah. So if there's no more questions, we'll wrap it up. And then for those that are trading this week, good luck. And then for those that are taking a couple days at the end of the week off, right? Good luck as well. So enjoy the weekend, and I will see you guys next week.